The stagflation paradox. Hi, you see here in white line the difference between the US 10Y and the US inflation rate year over year. And in orange, you see the spread between the 10-year yield and the 2-year yield of United States Treasury bonds. Well, here is the paradox. In previous ideas, here published in our profile, you can check, we showed you that as the yield curve disinverts, the dollar index should move down. So looking for that, the days of a strong dollar would be counted. However, what we see here in the white line is the contrary, is that as the real rates, which is the difference between US and Y and the year-over-year inflation rate, that's our gauge for that, it goes down, meaning more negative, that should weaken the dollar. However, clearly in this chart that goes back more than 20 years, we are way far from the average in the real rates. So we should revert to average. And that is clearly strong for the dollar. And that is a stronger indicator of the strength of the dollar than the spread between the 10 and 2-year yield. In short, as the white curves moves up, it is likely that the orange curve will go up as well. However, the result in the dollar index is that the dollar index should get more value. It should rise in value. It should go up instead of going down. So if you just look at the orange chart, you'll say, well, once the yield curve disinverts, it flattens again, the dollar will weaken. Okay, in the past it worked like that. However, because it's combined with extreme low interest rate, the real rates are at the bottom. Well, that will go up, and that by itself strengthens the dollar, and that is a stronger force than the steepening of the yield curve. So what we're going to have is a stronger dollar by real rates normalization, accompanied by a steepening of the yield curve. Maybe not a pronounced steepening, but that's what we see. And that means stagflation, because the steepening of the yield curve is a strong indication of higher inflation expectations. And the strengthening of the dollar is a corollary of higher real rates. And that's what we're seeing for the next month. So we do not see the dollar weakening. We see the dollar in its path for strengthening. And what does that mean for risk on assets? Well, it means risk off. So as we have been warning here, brace for the impact. We are going down, and by what this chart suggests, we have a long way, like till 2024, we'll be experiencing a strengthening of the dollar and pressure on risk assets, namely SP 500 and Bitcoin. Thank you.